Hey y'all, Trisha here. So today I want to talk about things we can do in a market downturn. As we all watch the stock market deal with all of this uncertainty, um, many of the past few days, being down several hundred, several thousand points for some of your stocks. Um, we need to start thinking about some of the things that we can be doing to at least take advantage of this situation because it might be a while before it recovers and it might be a prolonged downturn, just considering all of the chaos that's happening right now. So if you want to start thinking about things that you can be doing, then join along. Hopefully you find something that is relevant for you and things that you can do in your portfolio or in your early retirement that will help you endure the next several years. One of the things that I'm going to be doing is it's called taxed loss harvesting. And what that means is that I have a position in a company, an individual stock, that is um, at a loss. I've purchased it for more than what it's valued at right now. And for me specifically, I had some company stock that I've already paid the taxes on, and it's currently at a loss. It's not a significant loss, but it's a bit of a loss. So if I don't see the future of this stock rebounding and going higher than this, then it's kind of just sitting there, not really doing much for me. It does give me a dividend, but it's modest. So for me, I would prefer to have the stock, the money in cash in my account, and then I get, my write off at the end of the year because I sold this stock at a loss. So, yes, I did take a loss, but I'm willing to accept that because I get to write that off on my taxes at the end of the year. And I think the money will be more valuable to me in my cash account. So, that's something that you can look into. There's a lot of stocks that, you might even your loss might be very minimal, but you just don't see that stock as ever rebounding, or at least not, in the next few years. And so that money could be put elsewhere, where you can get a guarantee, at least 4% if you have it in your high yield savings account or something like that. But that is one option that you can look into during these downtimes. Another thing that you can do in a market downturn, which it's kind of hard to do, and it does feel like you might be timing the market a bit. But I mean, in essence, unless you're dollar cost averaging in all the time, you are essentially timing the market. Um, so one of the things that I'm thinking about is doing a Roth conversion. So if my stocks are down 20% and I convert them now, then hopefully when I need it, say in 10, 20 years, it's rebounded. And all of those dividends that come in, they're being reinvested into that stock, but now they're in my Roth account where I'll never pay taxes on them again. So, kind of a hard pill to swallow to actually move money in a down market, but sometimes it can make sense. And why wait until the recovery and then you still have to do the Roth conversion? So if you're somebody like me that already has planned to put Roth conversions into their strategy for the next 10, 15 years, then might as well do it while they're at an all-time low. Now, is it the bottom? Who really knows? So that's what I meant by timing the market. I mean, you're doing it at a time where you absolutely know it's gone down, but you don't know where the bottom's going to be. So there's a little bit of risk there. When you convert it, it may go down further, but that's just kind of the game we have to play. So that is another option. One other option that I've thought about in a downturn of a market is you're hopefully invested in really solid companies that provide a dividend. And so there's always the option to not reinvest the dividends and to live off of the dividends. Because in the current tax environment, if you have long-term capital gains, you can use those and they're favorably associated when you pay taxes. So instead of paying a super high rate on them, you can usually be at a maximum of 15% um, if you stay within certain guidelines. So dividends can also provide some relief in terms of a downturn that you're using that money to supplement, and so you don't have to take out or sell any of your investments. Now the downside of that is that another option is reinvesting those dividends, because those dividends, they essentially say you're buying your stocks on sale. So it's kind of either way is it depends on your specific situation and how you can best utilize those funds. But when we are in a down market, it is better to dollar cost average and continue to invest, because the whole idea here is that you believe that in some future time we will rebound, and that if you bought the stock while it was low, eventually it's going to go higher. So I mean, that is really the crux of the market, right? We think that we invest in solid companies, Costco, continuously growing more and more every year. And so as long as they're running their company successfully financially, that's a great investment. So the idea here is that you're buying little every single month or every single paycheck. And but if you're a retiree, it might be just when the dividends come in, you're reinvesting those dividends into that company and they're at a lower rate, so you're buying them on sale. That's another idea about having to kind of protect ourselves in this market downturn. And one of the last things that I've been thinking about is, you just really don't know how bad things are going to get, right? If we all had crystal balls, we'd be living on some island and enjoying life and not having any worries. But unfortunately, that's not reality. And so one thing that I'm thinking about is possibly just moving out of some of my positions and leaving them in cash. And possibly, if things really go amok, that's going to mean people are losing jobs. And it's kind of sad to think about. If somebody's lost their job and they have a lot of commitments, they're going to start to not be able to meet those commitments. And so if they bought a home, this little couple, they just bought a home, they have two jobs and now they don't. And now how are they going to pay that mortgage? And so, we might see in the next year, if things don't go correctly, people getting laid off and not being able to afford their homes. And so I hate to think of it, but it's a reality. It's a possibility. We've seen it happen in our lifetime as early retirees. We've been through some things. And so now might be the time to have some money put aside so that when an opportunity comes up, you're able to take advantage of it. And such a capitalistic kind of, maneuver. But I guess when in Rome. Unfortunately, I feel for people that are in those situations, and I don't wish that upon anybody. I think that's just it's an awful thing to have to go through, and I think everybody does go through some type of dilemma like that. So it's probably reality that you do have to go through it, but it's just an unfortunate reality. So my last suggestion in a market downturn is to have some cash set aside so that when stuff starts to happen, you have some flexibility to make some good investments. So Anyway, those are the things that I'm going to be looking into in the next couple of weeks, months, and making some changes because I think the stock market's going to be down for a while. And I want to make sure that I'm considering all options. If you have any that you think that you're looking into that you would suggest, please put them in the comments below. I love learning from everybody else as well. I think we all have experienced different things and we all come from a different perspective. And I think, you know, it's good to share that information. And that's my whole purpose for this channel, is for me to share things that I'm doing in hopes that they might help somebody else out, as well as me being a consumer of YouTube and also listening and educating myself as well. So, all right, everybody, we'll talk soon. And once again, subscribe if you haven't. And hopefully everything goes rosy and turns around and none of this is even relevant. But for the time being, let's be safe. Okay, bye-bye.